where the market is going, period. And this is called order flow, right? Order flow. Order flow, it's in the name. It's where are the orders flowing? Now, it's no surprise that the banks are in control of this market. So they're the ones that dictate where price is going. And because they have the mass amounts of capital, it's pretty much a very centralized market, which is a great thing, right? Because we are only relying on one collective's intention instead of thinking that so many different people move these markets, retail traders, banks, institutions, this bank, that bank, this hedge fund, this investment firm, this retail trader. No, essentially it is the banks. It's a multi-trillion-dollar market every single day. It can only be the banks. So we know it's centralized, which is great for us because that means we know we're only playing with one other market participant. So if you can understand that market participant's behavior, then you've pretty much hacked the markets. And that's what we've done. We understand the bank's intention. How? One of the most important elements is order flow, right? And order flow essentially is just our external structural swing points. So you see we have a high, swing low, lower high, lower low, lower swing high, lower swing low, lower swing high, lower swing low, right? So you very clearly see that price is trending to the downside. We expect now, even when price internally, which is something we'll go in another video, becomes bullish, break a structure, break a structure, break a structure, break a structure, probably break something in here to get up, break something here, break something here. But order flow, the swing high that put in the swing low, when you get back into premium pricing, in this specific scenario, when you get back into premium pricing, into areas of supply, and you wait for an order flow realignment, which is the internal structure realigns with the external structure, and you take a supply level that the internal, it's all about fractals, right? There's an external supply level, it taps in, you have an internal realignment. That internal realignment leaves level of supply. You can take a trade out of that level of supply and take it all the way down. First target here, second target here. And when I really understood this and began to practice this, it was like the missing key, right? It was literally the missing key. So we have order flow. And now, of course, inside of these order flow legs, you're going to have, internal. Very messy. Do excuse that. That is terrible. We're going to have inside of here, bullish, bearish, bullish, and bearish. And still, just pull this out here, pull this out here. So order flow is bearish. However, there are points in time where this level breaks structure and it becomes bullish. Now, lots of people are looking at this and thinking, let's buy. But if you just wait for price to get back into the premium of the leg and you wait for it to come into a level of supply, and then from that level of supply, you wait for the realignment where internal structure shifts back bearish and you mark out your supply level that caused it. And then you place a short, just like this, and you take out the low. That is a very powerful thing to do. Now, inside of our course and inside of our personal strategy, we do this on a much deeper level to the point where we are actually using 3 different time frames and taking executions on the 1 minute time frame. So imagine taking a trade on the 1 minute time frame, targeting a higher time frame swing low. That is where you are seeing things like 1 to 100s, 1 to 150s. And people are thinking, this can't be real. This can't be real. This can't be real. But imagine you are, okay. I think we can very clearly see the price right now is overall bearish, right? If I zoom out and we take our swing points like we did before, you will see swing low, swing high, lower low, lower high, lower low. So order flow is bearish. However, internal structure, bullish, right? Low. Break of structure. Higher high, higher low, higher high, lower low. At the point in which price makes a lower low, we can see that the internal structure has realigned with the order flow. So if we understand where is the level of supply that caused this, we can mark out this level right here. And now we have levels of liquidity forming right before our entry level, right before our point of interest. We can place our short position as so. We can have our first take profit level at the internal weak low, because this is internally bearish now. So as price comes up and fails to take out the high, this low becomes weak. So we can take out this low. This is how to trade the higher time frame. And then secondly, we can then go ahead and take out the lows down here. A 37R trade if it comes through. Now imagine this huge stop loss being on a lower time frame, right? Imagine taking this trade on the 1 minute time frame and it being a 2 pip stop. That's a 1 to 200. And so that's exactly how they are happening. That's exactly how 1 to 100s are not only legit, but are actually being played out day in, day out in the market. So let's play price out, right? Okay, boom, straight, tagged in, with a perfect reaction. Notice as well, guys, notice that we build rest and liquidity. This is a news event. This right here is a news event, which is what the banks use, because there's lots of liquidity resting above here in terms of stop losses and buy orders. The banks use things like news events to manipulate price so heavily so they can drastically play out their intention, especially at the end of the week. Very important time for the banks. They can play out their intention without people being like, this is manipulation or X, Y, and Z, because it's just a news event, right? Everybody just goes, oh, it's news, it's normal. And you can see, right? First take profit gets instantly smashed. 12R. 12R, right? That's 12%. That's unseen of in the retail industry, unseen of in the retail communities. But not only does it just hit 12R, price literally continues to melt. And this is where we are right now, literally in the live market. And that is the power of order flow combined with supply and demand. Understanding the external, because we know this is low is weak. Why do we know it's weak? Because it's failed to take out swing highs, right? And the internal realigns. The realignment is the key, because price is bearish. You can't be trying to short whilst this price is bearish. The minute it shifts bearish, you can't try to short when price is bullish. The minute it shifts bearish, well, we now understand that the banks have shifted their intentions because they are the ones moving price. Price moves in such a way where they move price, they bring price back up to mitigate out of their losses, because to buy, to induce liquidity, they have to use buying power. If they leave those buys open whilst they want to take price all the way down into the bottomless pit, those are going to be running in a loss. Banks do not use stop losses because they run the market. As long as they can close those positions at break even, as long as they can bring price in there, close them, and then sell off, that's all they need. And this was the mass create of the news event. And more than likely, we will hit some level of this demand range that will produce some reaction, and then the eventual sell-off, and we'll take out these lows as already forecasted in our free market outlook weekly newsletter. So guys, with that being said, that brings us to the end of the video. I do hope you guys enjoyed. Any resources that you guys would like to see from us, please go ahead and see the description box below.